What's going on, guys? It's Daniel from CoinSpots here. Last day of the work week, Friday. Super stoked, getting ready to crush this cryptocurrency revolution. Am I right? So, today we are going to be taking a look at Bitcoin, Monero, and EOS. I actually opened up a trade on EOS the other day. I didn't post it up on Twitter. I probably will after recording this podcast, but it's a nice little short. I have pretty good conviction of the trade, so we're going to discuss that. Then we're going to be talking about the big news pieces. So the Department of Justice is apparently investigating crypto manipulation in Bitcoin and Ethereum markets specifically. And then we're going to be ending this off with the potential for deregulation of banks in the U.S. and how that would act as a catalyst for more people getting into cryptocurrency. Right. So I know the chart is a little bit messy today. And we're moving this arrow, trying to make it. There we go. That's perfect. Get rid of these ads. So I've been seeing a lot on Twitter, actually, of this kind of pennant formation where we're forming higher lows and lower highs with also a decline in volume. And usually this is what is considered an accumulation phase where there's a decline in volume with lower price, and that just is kind of a bullish setup. However, with a different array of indicators, you can make the case for both bullish and bearish for the short term, at least for Bitcoin. And we're going to kind of go over that here. No trade setups because the one that I was looking at, we're not actually there yet. You know, we haven't peaked at that 382 fib level as resistance. But honestly, with this declining volume and these higher lows, and with this trend line kind of basically right where my target is for my short, this kind of confluence here, it gives me a little bit more conviction that we might have a bounce at this level and kind of just maintain this trend line. Because right now this uptrend line is speculative. Because obviously with a trend line you need 2 points, but a 2-point trend line is just speculative. A 3-point trend line is one that actually holds. And, typically for trading, I don't give as much weight for trend lines as I do horizontal SR levels, but I definitely do include them in my analysis, just like candle patterns like, inverse head and shoulders or, bear flags, bull pennants, stuff like that. So if we zoom in a little bit, let's just take out this top trend line. And actually, we're going to go into the 1 hour. That's where I wanted to get a little bit more granular. Turn off the volume here. So actually, go back to the 4 hour for a second. Right now, actually, we're getting some resistance at this 7,600 level, which is kind of this little swing low that a lot of people actually missed, including me. Right here after this just huge bull candle, you can see we had this tiny little pullback right here that kind of supported this entire move up. And that's where we're seeing some resistance here. And honestly, if you look in on the 1 hour, this kind of pattern here is one that we've seen before. This very tight chop zone where the bulls are defending this short-term trend line and the bears are defending this horizontal resistance level. We saw this back a couple weeks ago in the $8,000 range, and the same pattern is just forming here. And simply because of this chop zone, and we're going to zoom out here again. Sorry for the constant changing, but these these huge wicks and basically pin bar candles indicate a huge amount of uncertainty, right? People are selling, then buying back up, selling and buying back up. When you see all of these wicks, that's kind of what it indicates, right? And this is just what we all call the chop zone, and it's really a no trade zone because there's no clear trend to what's going on here. And that's why I am, currently not taking any positions right now in Bitcoin. And we're just going to see where this thing plays out. And as a general note, I really do want to see this this trend line / support zone here tested and held, I should say, just so we can fill in this candle, as I've been saying, and hopefully that holds. However, the kind of bearish indicators is it looks like we're going to be having a TK cross, a bearish TK cross, that is, I can't speak, man. A bearish TK cross underneath the cloud, and the cloud is bearish. So that is, if you trade based on cloud, which typically I do for alts, not so much for Bitcoin and, Ethereum, some of the larger caps, because I've just found that SR levels and price action is a lot better and a lot, you get a higher strike rate when you use those apart from, something like cloud. But here, as you can see, cloud is telling you something bearish, right? Tenkin is coming over to cross below the Kijun, so we're going to see how this plays out, and also how this support here is going to play out. But overall, not taking any trades on Bitcoin, and it's looking pretty bearish. I am just leaving this alone and just letting it do its thing. Turn that back off, and we're actually going to switch over to Monero. Now, this actually isn't a trade. This is just an accumulation for me. So we're approaching this pretty big weekly level. As you can see, we touched as resistance here, broke through it with a pretty strong bullish candle, and then we've had 1, 2, 3, 4 touches as support, pretty evenly spaced in between, which is what I like. And you can definitely count this as a touch because it's about $5 off. And I am definitely going to be accumulating some more Monero if we get right into this box. This is just, something personal for me. As I said, these videos are just kind of documenting or journalizing what I'm doing in the space. I think privacy coins, specifically Monero and Zcash, have a huge potential simply because for the everyday individual, privacy is something that is paramount. And with public ledgers in Bitcoin and stuff like Litecoin, it definitely gives people a little bit of uncertainty about using it because, right, nobody wants to, broadcast, for example, maybe how much they're earning if they're paid in Bitcoin in the future, that is, right, or how much they've spent on, X, Y, or Z. Same thing with huge, big money parties because, a couple months ago, right, we had those Paradise Papers, I believe they were called. They were leaked, and it basically showed where big money was kind of investing in and how they were moving their money around. Obviously, big money, they don't want to release their secrets. So there is a big case to be made for Monero and Zcash, obviously the two biggest privacy coins currently in the space. And personally, I'm accumulating both of them at some really nice levels. This weekly level, definitely really nice. If we break through it, that's all right. But historically, for the past couple months, this has been a solid level to get in at. And this isn't a trade. This is just accumulation. I really do believe in Monero long term. So that's why I'm, going to be accumulating some right here at this weekly level. Moving on to EOS. This is actually where I took a short position, and I was watching this actually, this huge bull candle, and I had this marked, the 17,000 Satoshi level, and we just touched it right to the T, and then I saw we closed below it, and I opened up my short on this bear candle right here, and I do have my stop just here at the swing high at 17,316 Satoshi. A little short trade, and I am going to be targeting this blue box right here, which is a SR level, right? Pretty violent SR level, huge move downward, bullish candle breaking it, and then we touched it right here on this low. I do also have the 0.5 fib level marked as a potential zone to bounce, because it is right here where the start of this huge bull candle on this move up. It also has confluence with this bounce right here. So I'm definitely going to be taking some profits at this 0.5 level, just based on that theory of these huge bull candles being filled in eventually. So that's my move on EOS right now. Pretty stoked about the trade. I haven't actually been taking too many trades recently because everything in the crypto space has pretty much just been a chop zone, and Bitcoin right now is just in that void. Nobody knows where it's going. So really, it's totally fine to just step back and just wait for things to play out. So moving on to the news, this is the big story that has got everyone kind of up and about. That the Department of Justice is investigating illegal practices for price manipulation in the cryptocurrency markets, specifically related to spoofing or wash trading. And basically, if you don't know what spoofing is, it's just where a whale or a cartel, which is a collusion of multiple investors, send false buy and sell signals by inputting a very large trade and then canceling it before it gets filled. So basically, if someone were to go on GDAX and put in a 1,000 Bitcoin buy order, right, other investors are going to see that, and because of liquidity, if that buy order gets filled, the price is going to skyrocket on GDAX. Well, spoofing would be when the person who submitted that buy order for 1,000 Bitcoin cancels it right before it gets filled. So it sends false signals to other traders. And spoofing is illegal in regular markets, such as stocks, right, derivatives, stuff like that. And then wash trading is basically where somebody buys up their own orders, whether they have multiple accounts or are in collusion with someone else, to pretty much give false volume or false liquidity signals to the rest of the traders. So it's pretty much like a company that is buying its own stock to increase the price. So it's just a whale or a collusion of big money investors that are putting in buy or sell orders and then filling them from the other party or from the same party on a different account, which obviously is also illegal. And this article actually made me reference or go back and read Bitfinex article about this person called Spoofy on Bitfinex. So Bitfinex with a D at the end. It's basically a guy who is monitoring Bitfinex and kind of exposing them for potential fraud, and also the whole Tether situation. So basically, this spoofing and wash trading has been occurring primarily on Bitfinex, which Bitfinex has actually admitted that there was some, kind of manipulation going on, However, they really haven't done anything about it. And what's interesting about it, I'll link Bitfinex's Medium post down below. It's honestly a really good read, but he was basically saying how this person, this entity or cartel, it could be, a collusion of investors, has roughly, or obviously this is just speculation, but anywhere between like 20 million to 60 million on Bitfinex, and is actively, placing these spoof orders. So this is honestly really interesting because Bitfinex themselves has to know that this stuff is going on, because no one in their right mind would keep that much amount of money on an exchange. So it's going to be really interesting to see what comes out from this, because there's no doubt that there's been price manipulation in the cryptocurrency market. And really, this, kind of brings up that whole Tether situation again. And they did obviously just print like 250 million more Tether, which historically has driven up the price of Bitcoin. And that kind of got me thinking again, like, what would happen if, some kind of fraud was actually exposed and, Bitfinex like goes down, how that sentiment would ripple through the rest of the crypto market, right? Obviously, I've seen some people compare that to like Mt. Gox, but, Bitfinex doesn't control the majority of the volume. It probably controls a couple percent, especially for Bitcoin and Ethereum. Maybe for some of the smaller altcoins, they control a higher percentage of the total liquidity and what's being traded. But I think if something like Bitfinex were to go down, the sentiment, that's what would really just drive the price down. Obviously, this is just speculation, but that's kind of what this article has got me thinking about again. Because as I said, right, there's no doubt that there is price manipulation in the Bitcoin market, and it would show that basically this entire run up from 1,000 to 20,000 was pretty much just fake. And honestly, if that's like revealed, that would just be shocking to most people in the crypto space. But with anything, all of this is just speculation, and what if this, that, and the other, until some solid evidence or some solid details comes from this. We can't really do anything. Obviously, this didn't really have too much of an effect on Bitcoin's price, but yeah, we'll see how this turns out. So over to the last piece of news. This is an article on the Weiss website, and Weiss was basically that site that a couple months ago gave cryptocurrencies ratings from like A to D, I believe. They do the same thing for stocks. And this is honestly a really good read, because they are referring to how the Federal Reserve and Congress are getting ready to water down this thing called the Volcker Rule. And basically what this rule was, it was instated after the financial crisis in the United States, and it barred large banks from using deposited money to invest in high-risk assets, which I find ironic, because a lot of these big banks are negative, or have negative sentiment, at least, right, the CEOs and the top people, not the bank as a whole, but Jamie Dimon, for example, right, and a couple other these high profile members of big banks always criticize crypto for being highly volatile, yet they themselves invest in high risk assets. So specifically, what I found about what Congress wanted to repeal from the Volcker Rule was that positions held by banks for less than 60 days are speculative, therefore prohibited. They want to drop this assumption from the Volcker rule. Obviously, this is from Market Watch. Not exactly sure if this is the full extent of what they're doing, but this is a very, very, very important catalyst that could potentially transition or make the transition for a lot of people from regular banking into cryptocurrency. Because right now, banks pretty much have a monopoly over money. People deposit their money in banks because it's a safe way to do it, per se, right? You don't want to store it under your mattress. And then also you do get a little bit of interest rate, even though the past couple years, the interest rates have been pretty much non-existent, at least in the United States. This entire article here just pertains to the United States. But it's going to be, or this entire premise is just, in my opinion, a really big potential catalyst for switching people over into cryptocurrency, right? Because if banks are now able to continue trading these high-risk assets with people's money that they put in the bank, something like the 2008 financial crisis could potentially happen again. And one of the, I guess, less known things about banks, and it's kind of how the population is rationally ignorant about it, is that they don't really own their money when it's in the bank, because banks just use that money to lend it out and get credit on loans, and then also trade with it, right, on assets and stuff like that. So you don't have control of your own money when it's in a bank. And if for whatever reason a bank run occurs and everyone goes to the bank, they're not going to have the money to pay everybody out, right? So the whole concept, when you look at it from a bigger picture, is just fascinating. How we trust these centralized third-party entities with our money, but we don't have a guaranteed access to our own money. Where in cryptocurrency, you are your own bank. And that's the whole premise of this. The whole purpose of cryptocurrency was to combat the 2008 financial crisis, right? So this is going to be an important trend to watch. And obviously with the Trump presidency in the United States, it's more of a deregulation on banks and stuff like that, because that's just Republican policy. Not to get, political here on the channel, but just typically Republicans want a more hands-off approach when it comes to regulation. They think less regulation allows for more economic growth. And obviously the balance, right, it is true to an extent, but with everything, there needs to be a balance. But if Congress and the Fed continue pushing more of these laxing the regulations from the bills implemented after the 2008 financial crisis, I think that we're going to see a trend of more people getting interested in cryptocurrency so they can actually have full control of their money, right? So this is why it's honestly really important to keep up with some of these bigger news headlines, because it's stuff like this, it's catalysts like this that is potentially going to make cryptocurrency huge. Once people realize an actual use case for crypto and are like, why didn't we switch earlier? I can't live without this, right? Like back when the internet was first being invented and people were able to get AOL mail and their news online and how convenient that was, when they look back, it's like, why wasn't I, using the internet earlier? Because everything is just so convenient. When that catalyst happens, that's when crypto is going to be big. And obviously, this is just one catalyst. Another catalyst could be some sort of app that people don't even realize it's using blockchain technology and tokens, utility tokens, and stuff like that, that makes some sort of function so much more efficient, right? That could also be a potential catalyst to make cryptocurrency mainstream, right? But this here is just one of the many potential catalysts that could happen. So it's honestly really important to at least, keep informed or, browse the headlines of Yahoo Finance and stuff like that to keep in touch with these, because these macro trends can actually signal some big moves that you could take and big positions you can take in the market. So definitely something to keep your eyes on. Well, that's about it for today, guys. Hope you enjoyed the video. Hit that like button as always. Helps with the YouTube algorithm. Helps me get this channel growing, get it moving. Daily videos Monday through Friday. We're on this grind, capitalizing on the cryptocurrency revolution. So we're going to wait and see how Bitcoin plays out over the weekend, and we're going to be back here on Monday with the weekly close and kind of give a little bit of perspective for the week, or next week, I should say, right? So, yeah, other than that, thank you guys for watching, and I'll see you guys on Monday.